This is an Investor Ideas exclusive podcast series with founder of Stock Analyst Guru, Richard Lazaro. Richard has years of an institutional equity experience as a stock analyst, portfolio manager, and stock trader. He's managed stock positions at hedge funds and other investment groups in New York. In this weekly podcast series, you will hear insight on learning how to trade based on support and resistance, market updates, and sector close-ups. For the full educational experience, you can check out stockanalystguru.com.
Hi, this is Rich Lazaro coming to you from Stock Analyst Guru for Investor Ideas. Today is Friday, August 10th, 2018. Today the S&P, the Dow, and the NASDAQ were all down about 0.7, 0.8%. The Russell was only down 0.25%, but the Russell did manage to rally right at the open and was actually up on the day, unlike all the other exchanges, and then fell from resistance and fell back down to close in the red. As explained to you yesterday, the indices closed at their low of the day after trying for 3 days to go through resistance, and it was forecasted that we were going to dump today, and dump we did. Markets all gapped down at the open, and the S&P and Dow fell for most of the day before rallying a bit at the close, but still pretty lousy showing. The 10-year bond gapped down big today, and the interest rate fell even further, ending up at 285.7%, down 7.8 basis points for the day, a huge fall. I guess this turmoil in Turkey is creating a flight to quality, and they're bidding up our bonds here, which lowers the interest rate. Crude was up 94 cents today, or 1.4%, to $67.75. Snapped back into the range. Looks like the sideways trend is definitely intact. Sectors of note today, energy was up 0.6%. Software was up about 0.25%. Retail hung in there just marginally positive, but was up more on the day when the IWM or Russell was rallying. On the downside, semis got hit hard today for 2.35%. I believe we mentioned that was likely yesterday. Financials were down over 1% today. That's likely to happen when the interest rates fall this much because banks make money on the spread, and when interest rates fall, then spread narrows or flattens, and they make less money on the spread. And the SKYY and HAC were both down 0.8 and 0.5%, which is strange because they usually trade in concert with software, but today software was up, and cloud and cybersecurity were both down. Anything industrial related got hammered today. The XHB was down at 1.3%. Looks like that's going to be visiting the lows again. Home builders are not really investable here. On the exchanges, the S&P hit a low at the 20-day moving average today, which has been support for quite a while. So it's not surprising that was the low tick of the day. Today's low should hold in this move, or we are going to... So you need to keep an eye on today's low. Otherwise, obviously there's more downside coming, and we could be seeing 27.90 or so. We closed at 28.39 today on the futures, with 28.26 being today's low. Consumer staples continues to fall. Today's the 4th day down in a row. That's a group that's been acting badly for much longer than a few days longer than the market here. XLI, the industrials, gapped down and went down or sideways the rest of the day. Still in a downtrend, but could be holding on support right here on the 200-day moving average. It would be surprising if we just had a one-day fallback here. I know we were just challenging the highs, and we resisted pretty strenuously there for 3 days, but still I would think that the bears would try to do a little more downside damage here before they allow the stock market to go back up and challenge the 28.72 all-time highs. Folks, if there's any stocks out there that you want me to take a look at, feel free to email them to me. You can get my email address off of Investor Ideas website. And if you'd like to learn how to use this information to guide your stock picking and learn a great methodology for picking stocks that only go up, because that's how you enter them, and if they do go down, if you choose badly, then you know exactly how not to stay in them, what to do to escape them before they start to eat up your capital, and you get trained to run money like a professional. Actually, most professionals don't know what I know here because they are mostly fundamental and are not trained technically for the most part. Anyway, have a great evening, good weekend, peace out.
Investor Ideas reminds all listeners to read our disclaimers and disclosures on the InvestorIdeas.com website. And this podcast is not an endorsement to buy products or services or securities. Investors are reminded that all investments involve risk and possible loss of investment. To hear more podcasts, you can visit our audio page at InvestorIdeas.com/audio. And a reminder, you can also hear our podcasts on Spotify, iTunes, TuneIn, Stitcher, Spreaker, iHeartRadio, and Google Play Music. To help you follow and track sectors, Investor Ideas has created stock directories of publicly traded stocks for investors to use as a research tool to start trading and investing. Visit www.investorideas.com/membership to learn more about our stock directories and leading sectors.